presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. We're going to be joined in the second and third segment by Tim Ord of the Ord Oracle. Before we get cracking into any of the wild stuff happening right now, you can go to the front page of TFNN.com. I want to say we have the TFNN Holiday Tiger Dollar Sale. This is a fantastic time to get your Tiger Dollars. You get unbelievable savings with this, right? So you spend $500, this is our first tier, you get a 20% bonus, that's $600 Tiger Dollars. Second tier right there, you get $1,000, that's $1,300, that's a 30% bonus. Then $1,500 to $2,100, that is a 40% bonus. These Tiger Dollars go towards all of your purchases. Once they're applied to your account, some great savings. Now is a good time. We're only running this until Monday. It's Thursday today? Good, man. Yeah, we're running this till Monday, December 23rd. So make sure you get there for Christmas and stuff like that. And seriously, it's a fantastic deal for that. And then additionally, you know, I want to say we're going to have Tim Ord on today. What we just went through yesterday, and we'll talk about it. It's not maybe as severe as it kind of seems. But, you know, now's a great time to, you know, get Secret Science of Market Tops. I really recommend that. I was thumbing through it a little bit the other night, just kind of looking at what he was saying. And it's so it's very insightful kind of stuff. Let's take a look at what we got going on right now. In the composite up about 0.22%, trading at 19,438. The Dow Jones Industrial up about 0.3 at 42,453. The DXY trading very strong compared to other, you know, the dollar's strong against other currencies here, right? Up 108.42. You have crude oil off about 1.23% at 69.16. Excuse me, you got the E-mini up about 0.23% at 5,953. So futures are rising there a little bit. You got the SPY trading at 588 at 0.3%. Gold off, right? Off 1.53% at 2,612. You have copper off about 1.79% at $4.08. You have the Russell trading off about, Russell futures rather, trading off about 0.23% at 2,250. Let's see what else you got. Silver off about, wow, silver's getting smoked, off about 4% right now at 29.51. And then Tesla, man. I mean, this is like a repricing almost. With everything that the Fed basically did yesterday, quite a reaction. Of course, the interest rate 25 basis point cut was kind of expected, but it was more the long-term outlook. And we were talking about that a little bit before the FOMC meeting. I remember pulling that up and I was like, wow, I mean, that's persistent inflation for a couple of years and then below 2% target, still within the acceptable bounds, but below 2% target for 2027, which I believe was a 1.8% growth. So the Fed's definitely seeing persistent inflation met with some kind of contracting away from the target, which I think can pose an issue. I think inflation is going to be a lot stronger than maybe anticipated. I think Trump is continually, this is not political, it's just economic, right? I mean, continually shaping up to be a very inflationary president. You know, even if the tariffs don't go through, you have this, I don't even know what to make of this, what just happened, but he is trying to get rid of the debt ceiling, which is kind of crazy. I mean, I'm assuming he has some vision that he wants to do, right? Of course, with the border and all that kind of stuff. And, you know, kind of spending caps would prevent that. But I mean, this is completely out of left field, I think, especially for someone who's kind of considered as, very business oriented. This is, I mean, the government's going to borrow a bunch of money if this debt ceiling gets voted away. I think the Democrats like it too. So I would believe that a lot of the House Republicans actually would agree with him as well. And it's just interesting, right? We get rid of the debt ceiling, but we also have the DOGE that's trying to cut spending in certain areas. There's conversation around removing the, I forget I can't remember the term for it right now. Oh Lord, I'm blanking on it. But just basically, the backing on your bank account. It's very weird. There is a ton of uncertainty right now. It is feeling very strange. And I don't think it's just because of this, drop yesterday. I think there's a lot of very weird stuff going on. You're seeing massive pumps. You're seeing a bunch of people who are not usually in the market getting in the market. I mean, this stuff with like Qubit yesterday was insane. And first I want to say as well, with the SPY cracking down here like that, right? I mean, that's some pretty significant volume. But we're trading back at November 20th. So, this isn't like doomsday or anything like that, right? It's just a momentary kind of correction. This is just essentially giving back the Trump rally, And let's see, I mean, how many more days do we have till Christmas? I mean, we have we have 2 more sessions, really. I don't know if the market's closed on Christmas Eve, but I don't know. This whole thing is just so weird. And there's so much money that's being lost right now. I mean, let's take a look at these quantum stocks. I mean, this is brutal. This is what we're saying. This will go back down. This will go back down to, $1.29, something around here. Honestly, it might, bottom a little bit higher because you're going to have so many bag holders who aren't going to want to, throw out. But I mean, this conversation, these retail investors are leveraging up on calls at the top, and people are losing tons and tons of money. This is not going to, I mean, you might get a momentary bounce maybe tomorrow morning, because I think a lot of people are viewing this as like, oh, it's just a sell-off, taking profit, get in for the next leg up. There's not really going to be a next leg up in this stock. QUBT is horrible. It just is. It's off 46.13% right now. I cannot believe that it's still being spoken about as if it's some legitimate player. This was trading at $2.8 billion yesterday. We're at a market cap of $1.63 billion. Unbelievable still. You have Rigetti coming off. I mean, and this is the sad thing. I mean, at least Rigetti has some kind of concept of how it would fit into a quantum world. But even that's off 36.06%, $6.85. And this will continue to go down as well because there's just not the earnings right now, and the growth potential is there, but I think that's a long-term growth potential in a major way. And again, I think you're gonna get a lot of bag holders with this kind of stuff. Take a look at IonQ, which is actually doing like okay, relatively speaking, off 1.23%. Definitely a bellwether, I think, for people's sentiment on quantum. It is interesting to me that this isn't getting destroyed as heavily, but I think it's because it is relatively more legit, but it's still at $8 billion market cap. Stay right there, folks. We'll be right back with Tim Ward after this break.
Ho, ho, ho! The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Easy money.
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, $2,100 total.
Oh, wow!
But you have to hurry because this holiday Tiger Dollar double bonus sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're just talking a little bit about quantum, a little bit about IonQ, more about qubit than anything else, quantum computing. Let's switch gears here for a little bit. I want you to follow what I'm doing on the screen here. We're going to go over to ord-oracle.com. Now, every Tuesday and Thursday, we are joined by Tim Ord. He is the author of the Ord Oracle, this fantastic newsletter. I really recommend checking this out. You can go to his website, ord-oracle.com, check out the newsletter, check out the book. Additionally, go over to the services tab at TFNN. He has 2 fantastic webinars for your viewing. That is the secret science of market tops. That's how to, of course, identify market tops. And then 6 secret ratios every trader should know. Really recommend it if you enjoy him coming on Tuesday and Thursday. But before you do that, make sure you get some bonuses with the Tiger Dollar Holiday Double Bonus Sale. You're going to get some fantastic savings that way. Tim Ord, how are you doing?
Good. How you doing?
Doing okay. So a little bit of shake up on the Fed decision, gold doing its thing. What are we looking at today, Tim?
Actually, let's look at chart 1.
Perfect.
So this is kind of the where the rubber meets the road, and it's something that needs to be lined up. And if it doesn't, that'll tell you what 2025 will look like. But anyhow, the bottom, this is the Zwag Breast Thrust Indicator, ZBT for short. And the bottom window is this indicator is NYSE advancing issues over NYSE total issues, and you take a 10-day average of that. The trigger is you need a reading below 20, or not below 40. Mm-hmm. We're at, as of yesterday's close, we're 0.35, so that starts it. And within 10 days, you need a reading of 0.6. And so it starts when that indicator turns up. So I don't know if it's going to turn up today or tomorrow or the next day or whatever. But it doesn't necessarily start 10 days from today. It actually could be tomorrow or it could be Monday. Don't know. But anyhow, we're in the region where it starts. So now if it fails not to get to 0.6, that's a bearish sign, because this indicator only gets triggered in bull markets. So if it does get triggered on this next rally and we don't see 0.6 within 10 days, in other words, that's 2 weeks away, then most likely 2025 will not be a raging bull market like the last couple of years. So we'll have to wait and see. But this indicator, I'll be watching real carefully. And let's flip to chart 2 real quick.
Yep.
So this chart so far, it needs to be triggered. You need to see the reading around 2 weeks out to get 0.6. If we do, chances are 2025 will be a bullish year. So that's so we're kind of looking far out here. So let's flip to chart 2.
Yep.
And this is all about panic. And panic only forms at bottoms. You don't get panic, you don't have a bottom. Yesterday's trend closed at 103. We had 117 uptick readings. Neither one of those indicators are panic levels. And now, if you notice, this chart goes back to, looks like about mid-2023. So it goes back almost a year and a half. And the tan area on the chart shows the times when the 10-day trend got above 1.2 or higher. And that usually what happens at bottoms. So over the last, September, the last time we got a reading near 1.2 was back in September. And even though the market has kept going up and we had some kind of minor bottoms along the way, the 10-day trend never got there. Yesterday's 10-day trend closed at 0.98. And that's with almost a 3% decline in the market. So this is all actually kind of a bearish here. Normally, when you get a pullback, you want to see that trend go up. If you do, chances are it's a pullback in an uptrend. If you go a pullback and you don't see panic, then that decline or that pullback will continue until you do get panic. So even though we may see a minor bounce short term or some sort of a bounce short term, it's not the final low.
I see.
It won't be a final low until the 10-day trend gets up around 1.2.
Okay, I see.
So that's another kind of a bearish sign. So, and also this quarter is supposed to be the strongest quarter of the year. And that's, we're actually down for December right now. So we don't have a strong quarter. And also, yesterday was down almost 3%. Normally, when the market declines 2% or more, usually it does it in clusters. So it's not a nominee, but you'll never see a 2% decline. And at some point, you'll see another within close proximity of that 2% decline. So in my opinion, we're going to see another 2% or better decline in the coming days, where it probably won't happen this week, maybe not next week, but maybe first part of the year.
I see.
So all that doesn't bode well for the ZBT. And the next decline, because I think there's another one coming, there's high probability another one coming. If it does, we get the trend up to 1.2, then we'll start looking bullish again. But there's no reason, in my opinion, to buy yesterday's decline. Not yet. We did close outside. Actually, I think I got that chart. Flip to chart 4.
Okay. I have it up right now.
This is kind of a bullish sign short term. But if you look at the volume chart, which is the second window up from the bottom, you'll see a spike in volume. Normally when volume spikes at least 30% compared to the previous day, yesterday's volume spiked near 100%. That's an exhaustion move to the downside. And we also noticed we did close below the lower Bollinger Band on the daily time frames. And I pointed out previous times when that has happened. So there's a bounce here. How high the bounce, I don't know. I'm not playing it because I don't see enough panic in the market to really suggest this will be a lasting bounce. But on a short-term basis, you may consolidate up a little bit. But I'm more inclined to wait for the bounce and possibly even go short. That's a possibility. I don't see any reason to short right here because there's some signs. But last week or Tuesday, I was actually all bullish because we had trend readings up there in the vicinity between 600 to 605, and that support should have held right around the 600 area, and we blew right through it. So that's when these type of bullish signals fail, then you got the bigger forces going on. So I'm actually kind of leaning bearish here. So am I short yet? Not yet. But I'll see how the bounce goes, and maybe I'll get short. I don't know. But things are not actually looking ideal here for the market.
Sure.
We can look at chart 3 here real quick.
Absolutely.
This is another chart that it's not quite as good as ZBT because it takes in the 10-day average and But this one is a 3-day average, a little bit shorter term. We did get below point, and we're actually at 0.47 yesterday. We need to get below 0.7. We did that. Again, we're down 0.473, so we're way down. And so now 10 days later, we need to see a rally up to around 3, and that would be a sign of strength off of a bottom. And that'd be a trigger that would be bullish too, but I don't think we're going to get anything like that over the next couple, 3 weeks. So
Tim,
things
please.
are not looking good.
Yeah. No, I kind of share those sentiments a little bit as well. Tim, please stay right there. Folks, we'll be right back with Tim Ord right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You watch the Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. Again, I really want to recommend you go to check out his website, ord-oracle.com. TFNN.com. There you can check out his newsletter, his book. You can contact him. Additionally, on TFNN, we have 2 of his webinars, Secret Signs of Market Tops and the 6 Secret Ratios Every Trader Should Know Before you purchase those. Strongly recommend getting some Tiger dollars. You're going to get some great savings that way. Tim, before we went to the break, we're talking about the SPY. I just want to clarify for myself, this big leg down we had yesterday, when you get kind of this, I think you said something like, I guess it would roughly be like 130% of the volume, right? We had, I guess, 150 yesterday, roughly. That shows kind of an exhaustion in that movement, I would suppose, either way as well, even on a big leg up. And so that's kind of what's showing you're getting a little bounce going. That's what we're having today. And the bounce is on, far, far lighter volume. Is that a right way to kind of look at that?
Right. If you look at the chart on that SPY chart, the last one we had was mid-November, which actually was exhaust move to downside volume. You get that spike where you get a volume that looks like a finger out of, average daily volume, and all of a sudden you get a finger out of, it kind of just sticks out. When that happens, that takes all the energy out of the market. All the energy is just displaced. A lot of times the market will just stop in that, and it'll flip it to consolidation. But I always define a selling or a buying climax when volume's at least 50% higher than the previous days before it. And if you look at yesterday's volume, we're probably about 100% higher, maybe like you said, 150% higher. So all that energy's been spent. So the down climb at the moment has stopped. And so the market may go into consolidation for several days. Building up enough energy, then it may do another decline. I don't know. But over the last couple of years, those exhaust moves to downside, all of them pretty much marked bottom. Some were tested, some were not. But usually you want to buy those exhaust moves to the downside. So this one, because I think the uptrends may be ending, this is not the one to buy. All the rest of them, when you had a spike in volume, the trend jumped up at least at 1.2 or higher, showing panic at that exhaust move on volume to the downside. This one, you don't have an exhaustion, or you do have exhaustion volume, but you don't have panic in the trend. So this is not a bottom to buy, other than a minor bounce to the upside.
Okay.
So I don't know. Is that too much words or what?
No. That very, very enlightening on that. Thank you. And then I know we kind of got cut short. I didn't know if you had anything else you wanted to say on the moving average. I think it was chart 3, because I know we kind of skipped into chart 4 a little bit early.
Actually, this is kind of a ZBT thing, but it's set up too.
Right.
I guess ZBT, that says wag breath thrust indicator. This is kind of another, instead of advancing issues over total issues, is advanced decline type thing with 3-day averages. It responds a little faster. This one usually responds pretty fast. This is a 10-day average. This is not 10 trading days, but actually 10 days. So this, if this will respond by next week. So for some reason, this market does rally and rallies into, say, Monday's or next Wednesday's Christmas, but say the market does rally into next Friday, and this 3-day average of advanced decline does get back to 0.3. If that happens, chances are the ZBT may also trigger, and that whole thing would turn really bullish. So that's the reason why this one acts a little quicker, and that's the reason why I'm showing it. But I'm thinking that's probably not going to happen. So we'll see. So it's not a good sign how yesterday's decline, how it went down, because we didn't have panic in the ticks or tricks, or trend or ticks. So I don't know. Don't want to confuse everybody, but
no, it's not confusing at all.
Things are not looking good.
Yeah.
So we can go on to the gold market here real quick.
Yeah, I think so. Let's take a look at it.
All right, chart 5. This is a bottom window. This is a weekly GDX-GLE ratio, goes back to 2012. And I noticed here, I was doing some research, and every time this ratio got down to around, actually it's 0.14 area, which we're pretty much, we're at 1.43 right now. But every time it got in this vicinity over the last, 2018, every time it got down, that was an intermediate term low. The 2016 low did get a little bit below it. That was a fast rally to the upside. But back in 2014, we got down to this 0.104, and we're back down there again. So I thought that was interesting. It's kind of a valuation that compares gold stocks to gold, and when the valuation gets cheap, a lot of times that's a good buy on gold. So I'm kind of wondering if this is actually there's going to be a change next year of how the market, what's going to lead the market. I don't think the equity market is going to be leading the way, and I'm trying to find what's the other sector that may do that. And gold stocks is a possibility, so I'm looking for that possibility to happen here. And if you look at the GDX chart, again, this is a weekly, I drew some trend lines there, and we kind of, it looks like to me it's a head and shoulders bottom, which I called before, and we're back to one of those necklines. And with the GDX GLA ratio back down to where it's bottomed in the past, going back to 2013, I think this area could be an important area. And there's another reason why we flipped to chart 6.
Yep.
This is more of the shorter term version, but the top window is GDX. Next window down is the cumulative up-down volume. Next one lower is cumulative advanced decline. The bottom window is the GDX GLA ratio, and I just put Bollinger Bands on it. The last buy signal I got was at the November 15th low, where all four of those indexes hit below the lower Bollinger Band, and the blue lines are time when you hit above the Bollinger Band, and the red lines are hitting when you hit below the lower Bollinger Band. And again, we're hitting right below the Bollinger Band on all four instances. With that, also with the GDX GLA ratio hitting down around that 0.14 range. So I thought that was kind of intriguing. And if you go to chart 7, back in November 15th, we had the inflation, or we had the 18-day average up-down volume advanced decline indicators. Both of them hit below minus 40 back on November 15th. And well, we actually broke below that November 15th on GDX. And I listed the time squared in red boxes where they made higher lows.
Do you want to wait?
I thought that was important too.
Do you want to wait a little bit into the next segment and kind of explain this chart a little bit more?
All right, I could do that.
Fantastic, Tim. Thank you. Folks, stay right there. We'll be right back with Tim Ward right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. I am joined right now by Tim Ord of the Ord Oracle. We were just going over the last chart here on the GDX. Tim, if you could kind of run back over just a little bit what you were saying. I know we kind of went into the break there, so.
All right, go back to, I have a squared box back in 2016.
Yes.
You can see that the best. And anyhow, that indicator, both indicators, 18-day average up-down volume, both hit below minus 40, it looks, I don't know, mid-2015. And the market quit going down. It kind of went sideways for several months, but did hit a lower low, looks like about in early 2016. The point is, both indicators made higher lows. So that's what I'm trying to point out. Same thing happened in 2022. Both indicators went below minus 40, and the market actually went a little bit lower over the next several weeks. And both indicators made higher lows. And we have the exact same thing right now. We hit, November 15th, we hit the bottom window's advanced climb, we hit minus 42, and the up-down volume hit minus 48. The market bounced up. Now we're hitting a lower low, but both indicators are making higher lows. And this is a pretty rare occurrence. Yep. This goes back, almost 10 years. And the signals that generated when this indicator, both those indicators get below minus 40, only happen, 5-6 times over a 10-year period. So you only get once a year that happens. So this looks at the bigger trend. So the market really, to have this type of a signal, you really have to have a kind of blowout market to the downside. And that's really good. You don't want to have a minor pullback. You want to have a blast out pullback. And that's right. Just what we had. We had a little bit of price damage, but it didn't really hurt anything on the bigger time frames. The monthly charts are still on buy signals. The weekly charts are still on buy signals. So I'm thinking that this positive divergence over the last several, going back to 2015, the previous two worked just fine, and they actually had some pretty screaming rallies off that low. And I'm thinking this is a possibility this to happen here too. So, I'm saying there's going to be a shift in leadership next year, and there's always a bull market somewhere. And I think this gold market may be one of the bull moves next year, where the equity market maybe, I don't know, it won't be as strong as it was this year. Sure. And I haven't, will be a down year. I'm not for sure yet. It could be kind of a sideways year, so we'll have to wait and see. Normally when you get a president come in, a lot of times the first year of a new election president, the market doesn't know what the president's going to do. So it kind of waits and sees. Sometimes you get a bear market. Sometimes it kind of just flips sideways. So Trump's going to make changes. And market does not like changes. It likes predictability. That's the reason why it did pretty well over the last 4 years, because they knew what Biden was doing.
Yes.
And so that kept the confidence in investors. Investors are not sure what Trump's going to do, even though he he's for bull markets, but it may affect his decisions on some things may affect their investments. So they're going to kind of wait and see.
Definitely.
So not necessarily bad, could be more of a sideways year, but probably the year after would be much stronger. So we'll have to wait and see how that develops. But inflation is still there. It's going to probably be stuck there for a number of years. I don't know. I think we'll go out to 2027. I think inflation may last that long just because of the cycle analysis. But this is still one possibility that the gold stocks may do very well next year. So
fantastic.
We'll have to wait and see.
Yeah. Tim, thank you so much for coming on again. I think.
All right.
Yeah. I'm gonna have to check. I know Tuesday's the 24th. I think we're still open. We'll keep it posted. But if not, we'll see when we see you.
Actually, I'll be out of town, so I won't be here.
How about that?
So I'll be here Thursday, but I'm leaving. So next Tuesday I can't make it.
No problem at all. Well, then, Tim, we will see you Thursday the 26th. Hope you have a fun time where you're going, all right?
All right.
Yeah, Merry Christmas, Tim. Thank you.
So we'll see you then.
Sounds good, Tim. Thank you so much.
Christmas.
Yeah, this is, again, having Tim on is always great, right? I mean, the way he looks at stuff, I'm not familiar with anyone else who does it this way, and it's just very thorough. So I really want to recommend, again, you guys go to the ord-oracle.com at the end of programming today. Just check out what Tim has to offer. Again, you can always go back to our YouTube channel as well, Tiger Financial News Network, and we have all of those kind of archives uploaded between Tim and I, and then Tom and Tim as well. Very worth going back through. And again, you go to TFNN and get those 2 webinars. We've been having a few people sign up for these, and they have enjoyed it very much. So strongly recommend that. Great for chilling when the markets are closed during the holidays. Let's take a look. What did I want to talk about? I had some stuff written down. I guess I'm gonna do a little update just on Nebius. I'm still in this position. I still want to be in the position. It is getting a little bit freaky here. It blew through this support of 30, which was pretty high volume day there. You're gonna get right back probably to this low around this 25.51. Kind of rejecting getting sold off a little bit today, which I love to see. I like this stock. I do. Even this is it's even cheaper. I might DCA at these levels just to kind of see. I think it has a catalyst point in January with CoreWeave. It does. CoreWeave is a competitor. This is the guy that's out in Europe. They're expanding into the US as well. Strongly recommend checking out their website if this is something that kind of interests you. Again, renting out big GPU clusters for personalized AI training. I think the management is fantastic. They have a bunch of cash, got money from NVIDIA. They know what they're doing. They have tons of engineers as well working on this kind of stuff. So you ask, why is it like this then? Why is it not moving? What's up with the price disparity? I mean, the thing got delisted because it was Yandex prior to this. He had to divest out of Russia and opens back up. And honestly, since doing that, I mean, you're opening, around, you had this day, right when it's back, right, 20 to 14. We move back up to 27 here, I mean, you have this big kind of sell-off. You run up here, sell back down, not doing a whole lot of stuff until we're right back up here. I do think this has a lot of potential next year to really run. They're projecting an ARR of around 500 million to 1 billion. And the guy who runs this thing and all this management has done this before. Not in this kind of, not in, GPU cluster rent outs. But with a bunch of different kind of tech stocks as well. And Yandex itself was extraordinarily successful before all of this. So I, have faith in it. I think their investor presentation is good. I think it's somewhat restrained as well, which you kind of want to have with these people, right? You don't want these big pie in the sky kind of investor slideshows, right? They're being very straightforward about what they think they can accomplish, why they think they can accomplish it, why they have a competitive edge. Very classic kind of stuff, which I like. So that's my thing in Nebius. I'm still in that position. I like it quite a bit. We'll talk a little bit, I'll find some stuff to talk about when we get back here. I have a bunch of stuff, honestly. Bitcoin, Ripple, weird news. Folks, you stay right there. We'll be right back.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to take a look at HIMS. Ooh. Okay, so off 8.9%, $26. Now, you know, I like catching dips when people aren't understanding what's going on. I don't think that's the case this time. I think you could still run into some issues. So what happened is that tirzepatide, which is Eli Lilly's GLP-1 drug that is officially off the FDA shortage list, and the question was kind of floating around, what is going to happen to the compounders? Now, semaglutide, which is what HIMS compounds still, that's Novo Nordisk's GLP-1 drug. That is still on the shortage list. They can still kind of compound this. But the question is what happens when it's not? You know, and then how does the FDA enforce this? Well, it just came out today that the FDA is going to rigorously enforce compounders essentially from doing that. So this becomes a big issue for HIMS in a major way. And I think that is a long-term issue for them. Once that semaglutide really starts getting, you know, kind of secured and the FDA starts enforcing it, HIMS can lose a lot of money with that. Now, there is, let me see here, I forget the name of this. There is a generic GLP-1 drug, liraglutide. So I think the way that they're trying to pivot off of this is instead of using semaglutide, and I'm not sure on the, you know, pharmacokinetics between the two of them, right? Liraglutide and semaglutide. Both are, I believe, made by Novo Nordisk. Yeah. Okay, so it's made under the brand name Saxenda and Victoza under Novo Nordisk, but I'm not sure that the difference between that would make something like semaglutide more appealing than liraglutide. But regardless, it seems like Hims is trying to kind of fill that gap. A little bit unfortunate for Hims. It had a great run this year. I mean, you're talking like September 9th, sub 15. Made it all the way up to 35, which is pretty good for an online generic seller. Folks, thank you so much for joining me today. We'll see you all tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.